Template for a simple scalping and day trading strategy. The best scalping and day trading strategy for beginners that no one ever told you. This video provides a clear, winning, step-by-step guide to how to successfully trade in the forex and stock markets or any financial markets and generate consistent profits. So, by the time you finish this video, you'll know exactly when to enter high probability trade using the best template for scalping and day trading. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Many new traders gravitate towards a simple scalping and day trading strategy because they want easy solutions to the market puzzle. But as they gain experience, they realize that simple strategies are rarely profitable out of the box. Yet, most traders still look for simple trading strategies. Why? Why do traders love simple trading strategies? First, it is easy to get started with a straightforward strategy. Hence, it acts as a helpful launchpad for any day trader, especially if you're just starting out. More importantly, the most straightforward day trading strategy is also the most flexible and hence the most powerful in the hands of a seasoned trader. If you look, it's easy to find many simple day trading strategies, including the Heikin-Ashi MACD strategy and the simple strategy using Bollinger Bands. These strategies are simple and easy to follow. Simple scalping and day trading template for trend pullbacks. This is a basic template. First, find the strong trend. Second, define a retracement. Third, establish your entry and exit rules. First, find the strong trend. Keep it simple and choose only one trend following tool to help you. Suggested trend tools. Strong uptrends in technical analysis. First, moving average sloping up or price crossing above the moving average. Second, MACD moving above the zero line. Third, ADX crossing above 25. Fourth, trend lines, higher high and higher low. Strong downtrends in technical analysis. First, moving average sloping down or price crossing below the moving average. Second, MACD moving below the zero line. Third, ADX crossing above 25. Fourth, trend lines, lower high and lower low. This chart shows the 5-minute bars of the British pounds United States dollar. It demonstrates how to use the simple moving average or SMA slope to identify the market trend. First, when the SMA slopes up, it indicates a bull trend. The green background makes it easier to track the direction visually. Second, the following session gapped down and changed the direction of the SMA. Having a systematic way to define the trend is essential, but always remember that the market can have no tradable trends. Learning to recognize when to step aside is an essential contributor to your trading edge. Second, define a retracement. We wait for the trend to slow down and retrace before taking a trade. A retracement is a temporary reversal of an overarching trend in price. Retracements are short-term periods of movement against a trend which is followed by a return to the previous trend. Jumping onto a train while it is speeding can get you to your destination. However, it's a stupid challenging to find ways to do it without getting hurt. It's the same for riding trends. We can hop onto the trend while it is blazing away. But we face the obstacle of setting stop-loss orders to protect ourselves. This difficulty is not a deal breaker if you are looking to ride a trend for the long run. However, day traders have limited profit potential within the day. Hence, we need precise stop-loss points to support our positive expectancy for our setups. This is where a retracement is helpful. It helps us pinpoint when the trend is slowing down so that we can hop onto it with controlled risk. For confirming a retracement, very often, price action alone is sufficient. So try to keep it simple. Let's zoom into the bull trend in this Euros United States dollar intraday chart. It points out the different criteria you can use to filter for pullbacks. Although there are many options for this part of the template, remember to keep things simple. So, choose only one tool to help you with defining the retracement. Yes, we might miss out on some trades because of how we define pullbacks, but that is a cost we pay for consistency. If you can use the same tool you chose in the first step, then congratulations, you are a champion minimalist trader. Third, establish entry and exit rules. A day trading strategy is not complete without specific entry and exit rules. You must know precisely when to enter a position and when to exit so that you can act without hesitation when the opportunity arises. Having specific rules also help to define our reward to risk ratio for each trade. To keep things simple, let's refrain from adding another indicator. Instead, try using the tools you have chosen from the earlier steps to trigger your entry. Here are a few suggested entry methods for long setups. First, bar patterns and candlestick patterns. Second, any bull trend bar. Third, oscillator turning direction. Fourth, a bar close above the moving average. Once you've done the heavy lifting by confirming the trend and identifying the pullback, the exact entry is often easier than you expect. Look at this chart. It shows the simplest entry for each of the pullbacks we identified earlier. What is the simplest entry method? Place a buy stop order above the first bullish bar that forms after the pullback. The primary value of the entry method is the stop loss it implies. Thus, when we use a bullish bar to enter, its bar low serves as a solid initial stop loss level. Beyond the stop loss, we also need to prepare for taking profits. Trading strategy examples. First, now, let's put the three parts of the template together in an integrated example. One that works without any trading indicators. First, we used a trend line to connect swing pivots to define a bear trend. Then, we waited for a test of the trend line before looking for a continuation trade entry. This test confirmed a pullback that we were interested in. Paying attention to the price action, we observed a bearish pin bar which triggered our entry. Finally, as this pullback was relatively deep, the previous extreme low of the trend offered a solid reward to risk ratio. Here, we used only one trading tool. The trend line. No trading indicators. A simple price pattern for entry and a previous support level for the exit. That's it. Trade simply. Second, the 50 EMA Super Trend trading strategy. Buy trade setup. First, find a strong uptrend. We used a 50-period EMA to define a strong trend. A strong uptrend occurred when the 50-period EMA is sloping up. Second, define a retracement period. We waited for a test of the 50-period EMA before looking for a continuation trade entry. This test confirmed a pullback that we were interested in. Paying attention to the super trend indicator, we observed a red line super trend indicator which triggered our retracement period. Third, open a buy order as soon as the super trend indicator changes back to blue. Set the stop loss on the support below the super trend indicator. Fourth, close the trade as soon as the super trend line changes to red. Sell trade setup. First, find the strong downtrend. A strong downtrend occurred when the 50-period EMA is sloping down. Second, define a retracement period. We waited for a test of the 50-period EMA before looking for a continuation trade entry. This test confirmed a pullback that we were interested in. Paying attention to the super trend indicator, we observed a blue line super trend indicator which triggered our retracement period. Third, open a sell order as soon as the super trend indicator changes back to red. Set the stop loss on the resistance area above the super trend indicator. Fourth, close the trade as soon as the super trend line changes to blue. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of the 50 EMA super trend trading to fully understand this wonderful strategy and to make the most out of it. A different mindset to building trading strategies. Once you understand the power of using a template like the one we went through, you'll also appreciate a broader lesson that will change how you build your trading strategies. Instead of focusing on the tools and strategies, start with understanding your goals. What do you want to achieve? Once that is done, you will find it a lot easier to choose the right tools for the job. This change in mindset is what our template process encourages here. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.